Yo, now what's up? What I'm about to show you will blow up your mind. Blow my mind. Okay, just kidding, that's a song. Anyways, what's up gang? Welcome back to my YouTube channel. It's your boy V Dollar back in today's video. Now what's crazy? Now I've been trading on $100 and we are currently at $200. Now what I'm going to show you is I'm going to show you how I was actually able to grow up this small account, and we are definitely still progressing, okay? Just like how you guys can see straight up in the screen recording, you can see that we got a beautiful trades from the setup that we actually discussed yesterday. So is basically lit. Now before we slide into the video guys, I have a small announcement. So we have the biggest expo coming up, okay? It's the Forex Bulls Expo and it's happening 27th August this year, okay? Now you can get a ticket at a discount. Use the discount code expo. The link is in the description below. Get your ticket, come have a trading experience never seen before. Anyways, let's slide into the breakdown and all the analysis straight up. Yo, now what's up guys? So I had to let these positions to run because I had to record the intro in the night, and then I had to let these positions to run. Now you guys can see we are $435 on this account, as you guys can see right about now. Now it's the same real account that we have been dealing with all along, straight up. So I'm going to be doing the analysis on how I was actually able to get these trades in. Now you guys can see I have 3 moving averages right here. I have the green one, I have the red one, I have the blue one. Now this might sound familiar, but this time around I have a few changes here, so that's what I'm going to be telling you about. Now of course, first things first, I know you guys know about the 2 moving averages because this one isn't, we have actually not used this before, the green one, but for these ones you guys know the concept behind. We were looking at the crossover and then we checked the crossover on a smaller time frame, that was the M15, and this is where we got the position from. You guys can see here straight up. So we caught this beautiful trade up to down here, okay? Now a quick one. So on using these moving averages, of course I told you guys sometime back that it's always better to first mark out those key levels, mark out the support and resistance levels, and see where we could actually get some resistance or some support, okay? So I guess you guys can see we did some analysis yesterday in the weekly breakdown, and we looked for sales on the GBP JPY pair, and guess what, it's the same thing that actually played out. So you can see that if we were to actually look on for our time frame, we had marked out a key levels. I'm going to actually add that video right here. You can tap up there after this and then watch it. And of course we were looking at ourselves coming down, of course. Now on the hourly, basically on the hourly, we can see clearly that it was a great clear downtrend. Of course we were pushing down, coming back for a pullback, pushing down, coming back for a pullback. You guys see that straight up, you know, clearly, so clearly, as you guys can see right in here, okay? You guys can see this this move here. Let me just make a few changes here for us to really be so able to see it. You guys can see that we had a beautiful clear downtrend. That's what we were looking at. Remember, it's very good to trade a clear trend. Don't go for sketchy trends, or if it's consolidation, then you're probably going to fight your emotions, because you could either have to hold the trade for a long time or all that. You guys know that. And then we have our moving averages. Now the magic behind these moving averages is you will see that at some point they will work as support levels. Now check this out. So we have this first point here. You can see this is where the moving averages were. You can see we have this point here. Now you can see that whenever we have a pullback ending, the markets will have to hit the moving averages and then move down. You guys can see this thing straight up. You can see this clearly. So you can see that our 2 moving averages at this point are sort of working as a support levels. When at every end of a pullback, we see the markets hitting the trend line, the moving averages, and then coming down. Now it's the same thing that we saw here. Now I didn't place stop losses on small accounts because I know I could place my stop loss somewhere and then get stopped out and then see the market pushing into my direction, and it's all crazy. But I don't recommend this. It's better to always place stop losses because you never know what happens. Okay, so it's the same thing now. Of course, you guys can see that we were bouncing off the two trend lines, and guess what? On a smaller time frame on the M15, it was a crossover. So you guys really know what this means. So when we get crossovers, it's game time. You guys understand my point? Now the 25 moving average is the red one, and then the 20 period is the blue one. You guys can see that. I'm going to cover up the green one later on because it's really so important and you guys need it, as you guys can see in this illustration. So you can see on the M15 it was a crossover, but then on the hourly, of course, we were seeing the behavior. The markets were pushing off the two moving averages, and then when we scaled down to M15, it was a great crossover. So when we got the crossover, it was game time straight up. So I scaled in my positions. Now the good thing about this, if you were to place a stop loss above the crossover, of course you have to look for a couple of pips. Now as you guys can see, if I'd actually placed my stop loss, you can see these were 46 pips. So if I'd have placed my stop loss around here, I'd have possibly gotten stopped out and then see the markets pushing into my direction, and that really sucks. So that's why sometimes I don't place stop losses, and this is how we are playing out. Now you can see that the risk is pretty big because it's a small account, and if I'm to take it really slow, I won't be able to reach my milestone. Now either way, going aggressive isn't good because at the end of the day, if I was to blow, I would easily blow up, right, straight up. So it doesn't make sense at any point. So I can go ahead and secure and close off these positions today, but let me walk you through for the green moving average. Let me take you through about the green moving average. This right here, I didn't told you about this. Now you guys remember sometime back we were using the 200 moving average. But this time around, this is not the 200 moving average. This is the 100 moving average. Let me show you real quick. So I'm going to show you the difference between the two. So this is the 100 moving average. You can see we set a period to 100, right? Straight up. Now, what's the difference? You guys might wonder. Now, what's the difference between the 100 and the 200? Now, I'm going to add the 200 also, and then we shall compare, okay? Let's compare together because I found out there's a difference between the two. So I'm just going to set the color of this to black. And there we go. So you can see we have the 200 moving average. Up, right, is the one up, this one here. And then the one below is the 100 moving average. Now, why the 100? Now you can see that the 100 moving average is so close to the market as compared to the 200 moving average. Now the 200 moving average is mainly important when we are trying to find the overall market direction or the overall trend. And that's okay. Remember, when the markets are below the 200 moving average, that's a clear downtrend, and when the markets are above the 200 moving average, that's a clear uptrend. That's for the 200 moving average. But for the 100 moving average, this is even going to help us establish when to get trades in. You guys can see that it's again working like a sort of a trend line, because at the end of the day, if we try to place a stop loss around, to place a trend line around here, you guys can see that the 100 moving average is literally working as a trend line. Okay, check this out. You guys can see that. So that's how basically the 100 moving average is helping us throughout here. So in this trade, I was using the moving average strategy. The difference was I changed the 100 moving average. I actually changed the 200 moving average to the 100 moving average, and you guys can see the magic that has actually been happening. So for now, I'm going to close off these positions, and I guess by the time I get more trades in, I'll be heading to $1,000. So let me go ahead and secure off these positions for today, and I will be seeing you guys so soon. I'm out.